Real is a huge company, and so is Nokia, once upon a time. In fact, Apple was already on the verge of bankruptcy during some of the recessions. Stock prices change every day for different reasons. No one can predict the market, and they would be lying if they said so. This fluctuation in stock prices can trigger an emotional response and push you to exit the market at a loss, which is what happens quite often, even with professional investors. But with real estate, it isn't like that. As long as it's in the city, the land beneath it will always be valuable. And even during crises, they often restore their value pretty quickly, since everyone needs a roof over their heads. Real estate covers one of our most important needs. When you buy a property, you can sleep well and be confident that you're not going to wake up the next morning with the news that your property lost half of its value. What also makes real estate attractive is that it provides passive income. With rent prices going up, you don't even need to work. It's one of the few investments that can provide you with a strong, stable income that has a dividend yield of 7, 8, or even 10%. Whereas, it's extremely rare for any company to pay a dividend yield of 5% or more. Some companies pay, of course, but they are risky stocks where you might lose much more by the drop of the price than you can possibly make out of dividends. Now, that doesn't mean that the stock market is something that will not provide you with any benefits. Real estate will not appreciate as much as the stock market. Let's understand this factor by an example. In 2019, home prices appreciated by 3.8%, while on the other hand, the S&P 500 was up to 28%. You can do the math. The stock market provides greater incentives for profits. As Warren Buffett puts it, that staying invested in stocks is probably one of the best ways to make big money. A similar example will further help us grasp the underlying concept. In the past decade, Amazon had a total rate of return of 1,209%, while Netflix had 3 times that gigantic number. You will never find these returns in real estate, even if you get your hands on some of the best properties out there. The rule is simple. The stock market companies are always competing to get ahead of each other. And this is where innovation comes into play. It helps the stock prices and, consequently, the returns for investors to gain height. Just imagine that in 25 years, Amazon grew from nothing to over $1 trillion company. However, no one can ignore the fact that business world is belligerent today. It might play in your favor today, and it might be the reason for your dismay tomorrow. Now, the market isn't like real estate, which will keep sitting in the corner and bringing some passive income for you. When we talk about taxes, it gets a little complicated, but let us make it easier for you guys. There are two approaches. The stock prices can go to 1,000%, but you are only getting wealthier on paper. To say that, we mean if you want to materialize that wealth, you need to sell that stock, which comes with a lot of capital gain taxes. And that is 20% for long-term investments and can go as high as 37% for short-term selling or trading. With real estate, there are multiple ways to sneak safely of these taxes. For example, instead of paying for the property up front, you can always deduct the portion of your mortgages attributable to interest payments on your tax returns. You can always recover the cost of income-producing rental property through depreciation. Even if you end up selling the house, you can always avoid paying capital gain tax if you purchase another property. To put a long story short, tax benefits are quite healthy in real estate. But of course, it's not all sunshine and rainbows. Unlike stocks, where you can look into the financial statements of the companies and look into the historical dividend-paying trends, the same cannot be said about real estate. With stocks, you can always research if you're going to invest in a company, but real estate requires much more work. To find a good rental property, it might need weeks or even months of research and on-site visits to make a decision. While both the stock market as well as the real estate have their own pros and cons, it would be hard to incline toward a single choice. The stock market can teach you more about the business world than your 4-year bachelor's degree, while real estate can teach you about cash flow, capital gain, and a lot of management. Both of these approaches have some leverages and endless opportunities. It would always be safer to do your research and choose for yourself that which approach would be better instead of blindly shooting your shots. That was all for today. Let us know in the comments section below about which approach are you going for and which one you find attractive. Moreover, press the like and subscribe buttons because you don't want to miss what we're providing.